First In.
AI startups received over $1 billion in the past couple weeks, propelled by 4 mega rounds. If we look globally, AI startups raised over $7.2 billion in the second quarter of 2020 in over 43 countries. What AI companies do you think will make the biggest impact in the near future? Elliot, start us off.
So first off, it's hard to believe that any enterprise software company, maybe even consumer company, isn't an AI company today. There was a funny time where the strategy was raise your Series A, whatever company.com, and then change it for your Series B.ai, and that would help raise your valuation. So for me, the most exciting AI company that I've seen is a company called Hyperscience, actually out of New York City. They recently raised a Series C in March of this year, announced in June. And what they're really going after is the enterprise automation space with a new category they've defined called software-defined management.
I like that. That's good stuff. Kate, what about you?
Yeah, I get super excited about when companies use AI for kind of regular people. You know, picking out a shoe, the perfect shoe for me, But when you can provide access to some people who don't normally have access to stuff, I get super excited. So whether it's credit for underserved populations like Mocha Phi, whether it's Womb, who's kind of like data science for women's health, that's what super excites me.
We like you being excited. We're going to keep that excitement going. Hadley?
I think the most exciting companies haven't been started yet or will be started in the next couple of years. And probably the most exciting area for me is ones that are utilizing cutting edge NLU. If you look at the progression of natural language understanding over the last 5 years and even the last 2 years, it's accelerating at a very high rate. We've come to the point where founders don't need to be a PhD in NLU to utilize these things. There's a lot of open source available tool sets that they can use to build tools and products that exceed anything we've seen before. So I'm really excited for this next 5 years.
That's great. Chris, what about yourself?
So the greatest trick the devil ever pulled was convincing us that he didn't exist, said Kaiser Sose in the movie The Usual Suspect. And I got to tell you, everybody's ignoring the gorilla in the room, which is Skynet, which has been operational since 1997 and is controlling our lives in ways you can't even imagine. Now, but kidding aside, one of my favorite companies is a company called Primer, which is kind of on the same topic. We got a small investment in it, and these guys basically build machines that can read and write. So what they're doing is, they're kind of leveraging the all of the advances in kind of petabyte scale processing that they've developed, and they're basically kind of trying to solve this gap that's kind of started, which is the amount of data is exploding and just exponentially, and the ability of people to kind of read the data and keep up with the data is lagging. And so Primer's working in a bunch of high throughput environments like the intelligence community and in retail and others to make kind of actionable, relevant reports that are as good as those that would be written by a human analyst. I wish I had had that in high school.
Yeah, I don't share your excitement with Skynet. I'm going to say that is not an exciting company for me. We've witnessed a drastic pivot in the venture capital industry toward a more conservative, result-based mindset. As VCs are going back to basics to make sure founders have sound unit economics, what are the most important questions you ask founders when considering an investment? Kate, start us off.
Yeah, so in the context of kind of COVID world, my biggest thing, there's a school of thought, out there saying, just, paint the story, don't talk about COVID. I think it's the most important thing you can do. So you better have a rock solid COVID story. And I also want to hear what happens after it's done and when things are back to quote normal, especially for the companies who did massive surges in COVID. It might look like really hot heels. So other than that, again, straight back down to business basics is the most important thing.
Chris.
Boom. So I'm looking for people who are robust nonconformists with the courage of their convictions. So I spend a lot of time asking questions like, where do you most violently disagree with the conventional wisdom in your space and why? Then I'm looking for people who kind of have a reflective and inquisitive sense. So I ask questions like, tell me about a hypothesis that you're currently testing, or what hypothesis have you recently discarded and why? And then, I'm always like curious about the kind of confident humility, people who can debate, mix it up, what have you. And I always ask, like, tell me about a debate that your team's having that's kind of simmering, that, never quite resolves itself. And then another one is like, tell me how your co-founders make you better. And how you make them better in turn. Understanding that interplay and how every great team is a well-rounded whole that's made up of jagged pieces that fit together.
Jagged pieces fitting together. I like that. It's like this group right here. I mean, the debate is real. Hadley, how about yourself?
I was going to go something like Chris's around, what are these points of view that you have that are really unique and run against the industry, but let's try something new. Let's talk about pricing. I'm a very early stage investor. It's not something that seed stage investors generally talk about. It's not important kind of what they end up doing for pricing. It's important how they're thinking about it. It will absolutely change. It always changes. Every single company I've ever been part of, the pricing changes drastically over that last 5 years. But understanding how they're thinking about their business model, even before they get to market, even before they have those first customers, is crucially important in just kind of getting into their heads and how they're thinking about their business.
Elliot, what kind of questions are you asking?
Yeah, for sure. So I ask the same 3 questions of every entrepreneur that I meet with. One is, why are you waking up every day and doing this? Because most entrepreneurs don't sleep. I really want to understand, like, what's your passion? Why are you doing this? 2 is how you define success in a 10-year perspective. As we all know, a lot of these things go up, down, left, right. It takes you a long time to get there. If an entrepreneur tells me, hey, I'm only looking to do this for 3 to 5 years, that's usually a sign for me. And then 3, I always ask them about what are their core values and which ones do they use to help kind of manage their business. Because for me, that's the gap between why do you do this? Do you have a 10-year view? And then how do you navigate all the ups and downs in between? However, I think your question had something to do with metrics. So I'm the growth investor, I think, here on the panel. So I spend a lot more time in Excel than most of the folks that we're talking to today. And I would say that, as you go from your Series B, C, and beyond to hopefully becoming an IPO company, things like gross margin payback, which ties all your operating things together, it really doesn't matter what values you run by, because you can start to do weird things with pricing, how you renew customers, how you roll out updates. So, of course, Excel is what it is. We all know that the Excel is wrong. And I really do think it is the values and how you reverse engineer yourself into success on the long view that matters.
Maybe just to build a little bit on what Elliot said, absolutely at the later stages, gross margins, thinking about that is super important. Biggest mistake I've ever made is not thinking about that also at the very early stages when we invest around seed. What are those gross margins going to look like at scale? You can have a company that can be very successful in terms of kind of top line growth, but if they don't have those margins, it really doesn't matter. You're not going to be able to build a multi-fund returner. So even thinking about that very early, even before that first customer, at least understand how they're thinking about that problem.
Absolutely. Having good flow here. Kate, you had something to say?
Yeah, one last thing that I think is just a really evergreen thing to look at, and in my experience has been make or break, is right back to that founder, but pretty specifically on, are you the type of founder who has the ability to drink from a fire hose? Because you're going to be in a hell of a lot of positions where you're drinking from a fire hose, and have a really good system in place that is not just yourself, to be able to filter through and get yourself moving forward, and has a little bit of humility and coachability to them, and is able to reach outside of their own person and ask for advice and help them forward. Because drinking from a fire hose, if you don't have a good process in place, will absolutely make or break what you're doing.
And maybe rip your lips off.
Yep. Never a good thing.
Yeah, you're going to need those lips to communicate your process, but I like that. Okay. Limited partners, historically the money behind the money, have always invested in venture capital funds, who then invest into startups. But the lines continue to blur as more and more LPs and VCs assume similar roles. What do you think VCs of the future will look like? Chris, start us off.
Sure. So, I play a lot of Xbox with my son and sometimes without my son. And so I've been attuned to this new phrase, like what we used to call noobs are today called bots. So if some players out there just like, kind of looking lost and whatever, and you can kind of take care of them, they're a bot. And, I was thinking about that. Most VCs today are bots, right? And, one of the things that, I always think about is the innovators are followed by the imitators who are followed by the idiots. And we've clearly reached the idiot phase in venture capital because there are just too many people starting too many funds, and it's madness. So what does the future look like? I think there's going to be there's still the barriers to starting a fund are continuing to come down. So there are going to be a lot of people coming in, and everybody's going to be fighting for, differentiation. But the word differentiation is a funny word because some things are differentiated in how much they suck. And that's something I think about all the time. But in terms of kind of practical, kind of what does the future look like? Look, back to this point about bots, right? I think the future is going to be very algorithmically driven. I think there are going to be a lot of people who, who are going to kind of throw up their hands, and we're starting to see some of it, already. And I think the use of data is going to become much more robust and rigorous going forward. But look, I'm on team human. I believe that drum machines have no soul. So I believe that live investors will continue to be important in kind of making decisions and pulling triggers. And so I love the style kind of pioneered by my friend Josh Koppelman. He and I used to sit at the Conshohocken Marriott in 2000.
Chris, you're going and going. I would appreciate that, but I'm moving on. Hadley, take over.
Yeah, I mean, if you look back kind of at the history of venture, it tends to be pretty cyclical. I think to Chris's point, there's just too many venture funds, and we get more and more every day as that barrier to entry lowers. A lot of people are going to lose money in the next 10 years with a lot of those funds, and there's going to be a pullback, and we're going to see this kind of cyclical nature over time. If you look at the current progression, you have multi-stage funds getting bigger and bigger, and everyone says, well, are there just going to be 10 big multi-stage funds? It's tough for me to see a world where they're able to address the very early founders. How can they incentivize partners to work on those small rounds, those small investments, and get paid the same as the folks that are leading $100 million rounds? I just don't see that working out unless they're more junior people and they're not the type of folks that founders are going to work with. So I think there's always going to be an opportunity for smaller funds early on, even if there are kind of mega funds that handle most of the stack.
Elliot, your thoughts?
Yeah, what I love about going last in most of your questions is I'm actually going to try to answer your question. I think it was about the LP's role as a venture capitalist. Look, if you take a step back, the reality is most venture capitalists kind of suck at this venture capital thing, just by looking at the numbers. You can't really be upset with a bunch of LPs that are making bets, and there is some thought that, because they've invested in so many top tier GPs, or at least what they perceive to be top tier GPs, they have a unique view into different segments, trends, and the companies that are competing with each other. So if I think about SVB Capital or GIC, who I've done a lot of co-invest with from an LP perspective, I think it's great. And most of the big funds and GPs are also investing in smaller funds to see deal flow and trends too. So I think we're all just trying to figure it out. And as long as we keep trying to figure it out, fund cycle over fund cycle, it'll all work out.
Kate, you're actually going last here. You want to round it out?
Yeah, so I'm going to hit this in two ways and two things I'm excited about. One shift forward has been VCs starting to invest actually in emerging funds. I'm obviously biased, we're an emerging fund, but it's really interesting from a risk perspective, and then additionally from a really cool deal flow perspective. So being able to tap into a lot of emerging funds who have really good relationships with founders, and in many of them who have access to completely new pipelines, that's cool. And I think a smart move for many traditional VCs. The second thing in the reverse is new LPs coming in. We're talking to a small community bank out of Wisconsin. They're just getting excited about expanding their portfolio, trying to diversify them. They're really excited about getting a little closer to the deals and getting into the nitty gritty and actually being a little bit more of an active LP instead of just sitting back and kind of waiting for your quarterly statements. So I'm excited for some of the new highly engaged LPs coming in.
That's great. Any other?
I'd like to disagree with just part of what Kate said in terms of large funds investing in newer kind of early stage funds. I understand why it's a good thing for the larger fund. It's not always a good thing for the smaller kind of emerging fund. Especially if you're a seed fund, one of your main jobs is raising a Series A from the best fund possible for that team. And if you're captive to a Lightspeed or one of these funds that's doing a lot of investments in seed funds, you're going to be biased in that. And I really think it's important that you kind of put your entrepreneurs first and you connect them and get them to raise some of the best funds for them, not just for your relationship.
Yeah, fair. But part of that is the original relationship that you have set up, which is I'll reject an LP in a second if I don't think that they're going to be a good partner. So that's just sticking to your guns.
I hear you, but who's the best investor for each company differs, so it's tough to do that across the whole portfolio.
And then there's one of the challenges with VC innovation is that people are off going, doing all kinds of stuff without really thinking about it. And I'm not an accountant, but I did stay at a Holiday Inn Express last night, and the people talk about things like ECI. Like, I don't think half the venture investors who invest in smaller funds know what ECI is, but for some LPs, especially overseas LPs, it's actually kind of a big pain in the butt and creates all kinds of reporting requirements. So there's a lot of stuff that's like quote unquote being innovated where like we're just like kind of dropping a bunch of landmines for kind of future people to tread on.
Great stuff.